Hello, everybody. Welcome to today's session. We're just getting everybody through the waiting rooms. We're going to kick off in the next few seconds, but thank you very much for joining today. Really looking forward to this session. So for those of you that I haven't met before, so my name's Dan Wells. I'm the founder and the CEO of the GrowCFO business, and super excited to be here today to help you all in your sort of CFO journey and careers by sharing insights from an inspirational CFO. Now, we are running this event in partnership with Xander, the search firm, who I know many of you would have already worked with or be aware of. And Dav has very kindly scheduled lots of questions and agreed to kind of host the bulk of today's session. Dav's going to be introducing our inspirational guest, Tom, who we are really looking forward to hearing from. So Dav, I'm going to hand over to you to do the introductions, if that's okay.
Yeah, sure. Thanks, Dan. Hi all. Thanks for joining. My name's Dan Fencl, as Dan just mentioned there. So I'm the founder of a firm called Xander that was set up about 5 years ago. And we specifically focus in on hiring CFOs for high growth technology businesses in New York and London. We've been partnering with GrowCFO for probably about 3-4 years now, since its early onset, really helping finance leaders develop into future CFOs in terms of getting involved with cohorts over in New York and in London. So yeah, this is part of a series, an audience with, we tend to interview CFOs who have kind of been there, done it, have all the badges, and can really help you on your journey, either as a founder, CFO, or VP, to scaling up the next technology startup business or the current. So yeah, delighted to be joined by Tom Fencl. So without further ado, Tom, I'm going to kind of pass it over to you to provide the audience with a bit of a bio on yourself, a bit of a synopsis, just to provide context for this conversation.
Sure, thanks, Dav. It's Fencl, by the way, rhymes with pencil. Never mind. Thanks again. My career with the sort of tech startups came relatively late in my overall finance career. I started as an investment banker, and I was briefly a private equity investor. And actually, my first CFO job was not a scale up, but scale down. So we worked on a restructuring of a consumer products company, and that was sort of my baptism by fire, if you will. Happy to talk about that as well. But the more recent tech career started 6 years ago or so with a German scale up SaaS company, PriceFX. We took PriceFX from when I started with a company of about 70 people, and I had ARR of about 3 million. To by the time I was leaving, we had about close to 30 million of ARR and about 350 people. We did a bunch of rounds of fundraising, B, B2, and C, altogether about 100 million of new funding that we brought in. Then later I moved to Localize, which is also a European SaaS company that's in slightly different segment of the market, more towards sort of a mid-market companies, where PriceFX was more enterprise focused. And currently I'm actually on my own. Localize has changed its strategy, and again, this is something that we can discuss, how companies change strategies and what that does. And I'm currently working with a couple startups on sort of helping them with their financial strategy.
Brilliant. Thanks, Tom, for that quick overview of your background. Appreciate it's difficult in 30 seconds, 1 minute, to condense, 20 years of experience, but you did well. So I was just going to start off with a kind of a few quick fire questions, just to, I suppose, get us warmed up and once again provide the audience with a bit of context around your background and kind of expertise. So Could be one word answers, could be a few word answers. I'll leave it up to you, but this is, as mentioned, just a bit of a warm up. So first question, startup or scale up?
Depends what you're asking for. I think my heart is with startups. But I think startups are just very important part of the economy.
Yeah.
But from a professional point of view, as a finance leader, I think scale ups is where you have the most impact.
Yeah, good. If you could only have 2 external advisors, Tom, who would you choose?
For startups, I would pick one, and that would be Yuri Lavin, the founder of Vase, Israeli. Who just, if you haven't seen his book, please go pick it up. It's just absolute must. I hate business books, by the way, but this is one which I recommend people to pick up. For scale ups, actually, Jocko Willing, the former Navy SEAL. And that's just because I think that he's helping you to think about how you actually do kind of grow a large organization while keeping it nimble and agile. And I think that's what scale ups need to worry about.
Like your choices. Best finance system technologies you and your team have used?
Oh gosh. I think that again, this little bit depends on which scale you are. I think that for scale ups, we were at PriceFX. We use NetSuite. I've heard a lot of negative things about NetSuite, but it is still kind of the default system. And I would probably say that of all the things that we looked at, that's the thing to go with if you're going to grow, particularly multinationally and so forth. On an early stage, the common things like Bill.com and QuickBooks here in the US are perfectly fine tools. But at some point you outgrow those tools and you just need to get something more robust. And so I guess my word would go for NetSuite.
NetSuite it is. What is one of your main superpowers, Tom, that's enabled you, I suppose, to progress into a CFO?
I think it's the storytelling. Ability to interpret the numbers as something that is a story that relates to the rest of the business, and you can explain things. I think that's bridging the gap between sort of the numbers and the rest of the business is the key part.
Yeah, right. And a slightly kind of negative question, but what's your biggest hiring mistake? Don't mention any names here, but yeah, just
no names. This is a hard question to be honest about, but I would say that the learning that is honest is that when you feel like you must do something, in this case, must hire someone, that's when you're most likely to make a mistake you will regret. I think it's a broader learning, but since you're asking about this would be the case.
Yeah. Best tip for managing a superstar?
Give them a lot of rope, but also remind them of the responsibility that comes with freedom.
Yeah. And on a final quick fire, on a scale of 1 to 10, how ready were you for your first CFO role?
-1.
Just throw yourself in is the message there then.
I think that, I think so. Yeah. I think that if you want to kind of dig deeper into that, I think that there's a couple different scales, and I think I was ready technically. Like I sort of knew the numbers, and and that you need to bring something to the table, of course. But in terms of being ready for the responsibility and for sort of the bigger picture, absolutely not ready.
Yeah, I think that probably goes for most people who are about to take that jump. Great. Well, some good information there, and some good interesting responses. Going on to the kind of more the Q&A piece now. Can you share some, I suppose, of your own experiences in scaling startups to new heights, and kind of what were the key factors that contributed to their success, would you say, Tom?
I think that, let's just define the term scale up and startup, right? So even though there is somewhat of a continuum, I think that for me, a scale up starts when you already have kind of passed the filters of having product market fit and sort of having proven business model, right? And you're just trying to grow it. And I think that the key thing there is, what is the market you're growing into? For us, for example, it was critical to pivot from Europe to the US. Can go into details, but that would be the kind of the critical decision, right? So do you have a target market, addressable market that's big enough for you to grow, and because you shouldn't be pumping money into something that you can't grow into? Do you know what it is, where it is, and then focus on that and truly kind of replicate the successful moves? And that's the difference to me to scale ups and startups, where startups, you don't know what the successful moves are, you haven't discovered it yet. By scale up phase, you presumably do, and you just need to do it in a sort of a discipline and smart fashion.
Yeah. In some of the startups that you operated in, did they pivot quite a bit in the early stage, and did your guidance on that kind of, I suppose, help them make the right decision?
Yeah, so the answer is yes to both.
Yeah.
At least I hope the second is yes. The first one definitely yes. I think it's a different level of pivot, right? So when I refer to what we did at PriceFX, that was less of a pivot in a sense that you were like turning the ship, all around, and it was more a kind of understanding that the resources are better invested in one market versus the other, and that's the kind of scale up decision you would be making. Hopefully by scale up phase, you're not deciding to rip everything and start again. But on a startup phase, then you would do that, and sometimes that can be very traumatizing for the team and everything.
Yeah, absolutely. And obviously, financial management is crucial for any startup's growth. What are some of the kind of important financial metrics and kind of KPIs that entrepreneurs should focus on to ensure kind of, I suppose, sustainable growth, Tom?
Yeah, so I think that there's a whole range of metrics out there, and I think that as a finance leader, you want to pay attention to multiple, because that sort of the balance kind of tells you the more richer story. But if I were to kind of say the one that, particularly on a scale up phase, where I would say I would spend most of my time, it would be sales efficiency or sales and marketing spend efficiency. Because, and we can talk about all sorts of other metrics and sort of what things you pay attention to, but just pragmatically speaking, in a scale up phase, you're going to be spending a lot of money on sales and marketing, and making sure that gets you the return on investment that you need. That's the one where you're going to have the most impact on the sort of success of that phase.
Yeah. So I suppose if someone's,
and there are different metrics to do it. I mean, there's different specific ways to measure it, but that would be the topic.
So if someone wants to, I suppose, there's a number of aspiring kind of finance leaders on this session today. If they want to become a successful CFO within a startup, it's important to, in the early stage, I suppose, in their career, to get that experience of business partnering with commercial functions and kind of go-to-market functions, would you say?
Absolutely, yeah. I mean, the first thing you want to kind of understand as you're kind of moving from something like controlling function or sort of an accounting function to sort of the broader top level finance role, it doesn't matter what the name is or title is that you can't just be spitting out numbers, right? Mm-hmm. What you're doing is that you're trying to, the way I would define that role is you're steward of the value of the company. And the value of the company is a function of two things. One, kind of a top line growth, and then the sort of efficiency or profitability that with which you're growing. And then there's a sort of an element of risk, and we can talk about runway and all of that. So all of these things are kind of what I think of when I say value, and you kind of you can't do much yourself. Because I mean, you can make some bad decisions that can affect it negatively, but by and large, you're not generating revenue. You're not necessarily hiring too many people. I mean, the team tends to be small, so most of your impact is going to be indirect.
Yeah.
And indirect impact means that can you help the commercial team to grow? Can you give them ideas for growth, and can you maybe do analysis of that, particularly if the company doesn't have robust revenue team and sort of revenue analytics team and sort of deal teams, and can you help them with that, right? Can you also, while doing that, point to them that, well, maybe this is a more efficient way of doing it, and sort of maybe this area is somewhere where we're not doing that well, so maybe you don't put too much resources into that, and that goes across the rest of the business as well, right? So that's how you're going to, and you need to understand it first. You need to talk to them to learn how, what they're doing, and that's the part where I think the bridge or the big step is from just spitting out numbers and saying here it is, to actually understanding and talking to the rest of the organization.
Yeah, sure. And within that particular ecosystem, startup, scale up, in 2023, specifically, it's obviously been quite impacted from a fundraise perspective.
I haven't noticed.
I'm sure it's not news to most people on this call anyway, but it obviously makes for quite a challenging time for these startups and scale ups, and in particular.
Of course, yeah. I mean, it's challenging, right? But I also would say that to some extent, there is a silver lining, at least to people on this call. I remember when I first sort of got into the tech startup world, I brought with me a lot of kind of good old fashioned finance kind of logic, right? And I thought the gravity was a thing, right? And I was told day in day out that there's nothing like gravity. It's just things just go on up forever. And so I think that there is the silver lining, is that people are realizing that things like profitability is a thing, and that you need to kind of count and think about the return on investment and all these things. And I think that this is what we do. And I think that this gives us, I wouldn't go as far as say power, but it certainly gives us more airtime, and people turn to CFOs a lot more readily for guidance. And I think that's the good news, if you want to see a good news in this. In terms of what you actually do, I think that it's the balancing of growth and efficiency, which we talked about, and I think that's the topic.
Yeah, and is there, you kind of covered this in the initial question, I suppose, but how can a CFO best position its business to attract investors right now? If it is going through a bit of a tricky period and runway doesn't look great, what else can a CFO refer to? I mean, sometimes it's black and white. But are there other bits of information that a CFO can present to make that business look attractive to investors?
There's a lot in that question, right? So I think that what you do as a CFO in presenting to investors is you combine kind of accurate information. And I think that's something that is important to keep in mind. We're not just kind of spitballing here, right? So we're delivering accurate information, but sort of understanding what the investors are looking for, and being able to connect the dots for them in basically saying, hey, this is what our numbers look like, and this is the unit economics, and this is how we can go forward. These are the things that we can and will improve. I think that's the way to do it. You still need to be able to demonstrate that there is sufficiently interesting target market, and then that it's big enough, so the opportunity is big enough. I think the one thing that I've encountered a lot, and I think that was somewhat of a shift in the kind of change we're talking about, is that people are now a lot more conscientious of what we call unit economics, right? Or just kind of profitability of each, what do you call it, whether it's a customer you acquire, or whether it's a whatever other sort of a unit of the business you have, what's your gross margin on it? What are you spending in terms of cost of salt or cost of sales, in terms of what's your customer success load? Do you need to spend all this money on customer success? Can you kind of improve the unit margin there? What's your cost of hosting, right? I mean, that there was all these things that I just said were things that at one point someone in the business quite kind of casually said, we don't have to worry about it until the sort of news came back that, hey, this business is not looking at healthy and we need to think about how to improve it. The same goes for customer acquisition cost. Like, I mean, when money is cheap, people only ask how fast you can grow, and don't worry about the customer acquisition cost. In this current environment, obviously you need to make sure that that what you spend to get a new customer is in some sort of good relationship with the value of the lifetime value of the customer you're getting.
Yeah, great. And I suppose on that point on kind of spend and cutting back on costs, I mean, as a CFO, how do you strike that balance between investing in growth and maintaining financial stability, for a startup?
Yeah, I think that there's two levels at which you would have this discussion with the rest of the management, right? There is the kind of immediate level, which is how much are we spending on sales and marketing, and are we getting ROI on that? And then the broader one is, how much we're spending as a business, which includes obviously things like product and engineering, and sort of what we need to spend there to support growth reasonably, and obviously also kind of a general and administrative expenses in terms of sort of what's the overall overhead, and can we afford what we're doing, or can we invest more? Should we scale back? On the first level, on the sales and marketing level, that's where the metrics we started talking about earlier are useful, right? So there is, and the good news is, if you folks haven't discovered it, then we can maybe later share some links, but there's plenty of sort of public or semi-public resources on benchmarking things like sales efficiency, like CAC payback. Those are all things that have relatively stable, not exactly universal, but relatively stable definitions of how they are calculated. And you have data points, so you can see sort of where you stack up. Are you top quartile? Are you middle of the pack? Are you bottom? And if you're on the top, then great, keep doing it, and tell investors, these are good metrics, we should invest into this. And if you're not, then you need to kind of revisit what you're doing, whether it's increasing, and that then kind of leads you to what can you do, right? I mean, you can cut back on the spend you're taking on investments or in terms of sales and marketing, or you can look at pricing. Maybe you need to raise prices or reposition yourself. And that's a very long way of getting me back to what we started with, the pivot I talked about. For us as a European company doing enterprise sales, we realized that at least in that particular space, it was a lot more profitable for us to do business in the US than it was in Europe. And that's because the sales cycle was about the same length, i.e. the cost of acquisition was about the same. We might have paid the US salespeople marginally more, but that wasn't the moving piece. What was the moving piece is that we were getting 3 times higher starting ACV, and for the same effort. So you do the math.
Yeah, fantastic. The next kind of question is a bit of a competency-based question, actually, Tom. I'm not interviewing you for anything honest there, but obviously every startup has its unique challenges. So could you share an example of a particularly tough situation you encountered while scaling a startup, and kind of how you navigated through it? I'm not going to rank you.
How about getting sued?
Sued? Well, that's
yeah. So I'm saying it only because I recently talked to another founder of a European business, and he told me pretty much carbon copy story themselves. So I guess this is a bigger thing. So yeah, so we were a European business that has been sort of growing steadily in Europe for a while, and then shortly after we kind of established a beachhead in the US market, which now is the largest sort of segment or largest market for price FX. We got sued by one of the leading US competitors, and that was nasty. That was nasty because it also came in midst of our starting to raise Series B. We almost ran out of money at one point. Well, how we dealt with it, that took a lot of explanations to the would-be investors. Ultimately, we ended up with a combination of a strategic investor and a European-based fund who was sort of more willing to see past the litigation issue. None of the US funds that were interested initially kind of had the guts to go into a litigation context, and then we eventually settled the lawsuit, and that kind of open path to the subsequent funding. But yeah, it was that was a scary moment.
I suppose, therefore, that your kind of ability to have those tough conversations and kind of be persuasive enough for them to see beyond certain things is really important. Yet sticking to the black and white, of course, which is really important.
Yeah, so I think that's a valid point you're making. I think that there is particularly in a situation like this, or in general in fundraising, where typically, you fundraise, and you don't have, you need to raise money, right? So that's kind of difficult always, is keeping your cool, keeping your nerves, be mindful of the fact that, particularly as a CFO, it's true for CEOs as well, or founders, but particularly as a CFO, in those situations, people will be looking at you. They'll be reading your body language, your facial expressions. Don't mislead them, but also don't freak them out. And I think that that's a kind of a general good idea, is that everything you say, as you said, black and white. So everything you say has to be true. You will be well advised not to say too much. If you want to also just only say what is true, and just maintain a confidence in face of the storm, and people will follow that, right? People will look at you and say, hey, he's still calm, he's still cool, and so we can get through it. When CFO starts freaking out, then that sends a very bad message.
I'd imagine you've got a good poker face, Tom. So yeah, not much, not much emotion, and very black and white, and so good with those tough situations, I would imagine. Yeah,
and that's one of the areas where my previous experience with turnarounds and some pretty hairy situations that also kind of like prepared me for this. So I knew what was on the other side, and
fair enough. Quite a few entrepreneurs, struggle with financial forecasting, Tom. So, what are your tips for creating accurate and kind of reliable financial projections to aid in particular decision making?
Yeah, that's a great question. I think there's two parts, right? So you said accurate. So I think that's an important thing for everything you're looking back, right? So all the things that you know about the history, you want that as accurate as possible, because the last thing you want to do is starting your projection forward based on sort of incomplete, inaccurate, sort of bad read of what has happened. When it comes to then, on the basis of this, forecasting what's ahead, accuracy is not necessarily the first thing I would come up with to describe it, because at the end of the day, you're describing something what hasn't happened yet, right? So it's not about accuracy, maybe, in that sense. I mean, yes, you don't want to make silly mistake in Excel model and stuff like that. But what I think is important, and to your point about founders or non-finance people maybe struggling with this, is something which I sometimes explain to people as the kind of caveman math, right? What I mean by that is it's very easy to get lost in a spreadsheet where you have hundreds of rows and tens of columns and sort of layered assumptions. And when you find yourself either doing that or seeing someone else doing that, my recommendation is to stop and say, hey, what I mean by caveman math, right? Our ancestors, they did everything in, you know, fives and tens and you know, things that you could kind of visualize. You can see, you can count easily with your eyes. Like you don't have to use spreadsheet, right? So basically my recommendation is, and that travels very well precisely sort of outside of finance to sort of business people, is think about everything as sort of small numbers that you can understand, right? So when someone tells me we're going to close, you know, 1,200, you know, 52 new deals, I'm like, I don't know what that means. Right? I don't know what to say about that, because it may be too much, too little, who knows, right? But when you start breaking it down into saying, well, you know, one salesperson will close this many deals per month or per week or quarter, depending on the size of the business, right? Obviously, that's what I mean by scaling it, right? So you kind of break the business down in things that you can count on, sort of digits of your two hands, and that allows you to be clear what the connections are, and also communicate with the rest of the business. Is this reasonable? Is it reasonable to say that, you know, our best salesperson will close 6 deals in a quarter and the worst will close 2 deals? That's a type of question that a commercial person that can't answer that shouldn't have that job. But if you just throw at them a spreadsheet with million cells, they'll, you know, say, yeah, it's okay.
Yeah, I suppose keeping it simple is really important. I mean, we obviously work.
And by the way, it travels really well with VCs as well.
Yeah.
Right? Because go back to the storytelling, the best presentation to a VC isn't a spreadsheet with, you know, a million rows. It's sort of a, you know, another way of saying it is like a sort of a kindergarten presentation, right? So the bunnies and ducks, right? So you kind of show it to them really clear, really simple. Obviously you have attachment, which is the complicated spreadsheet. You still need to build it, but the way you present it is by saying, you know, next year we're going to do twice as many per something, right? That kind of like very big numbers, simple big numbers that are easy to visualize. And you see how you can realistically move from one to the next, how sort of big numbers will move. By big, I don't mean, I could not be clear, I don't mean with lots of digits. I mean big as in like one spreadsheet has big font numbers, right? So
Yeah.
Simplified.
Yeah, no, I think you're right. I think, look, we work with founders on a day-to-day basis, and when we're recruiting CFOs for them, we have to steer them a lot, because they don't really, a lot of them don't really understand finance, and hence they need a CFO. But that's even more of a reason to keep things simple when you're, I suppose, presenting to entrepreneurs and founders in terms of what are the key headlines from the forecasting. You know, what are the key things that need to be measured and need to be looked at, rather than sending them through a spreadsheet and piling them with information. So
unless this is interpreted as advocating sort of oversimplifying things. I'm not saying oversimplify things, but I think what I'm trying to kind of stress the importance of is you don't want to find yourself in a situation where you're running a black box, because that means that you haven't established the connection with the founder or the CEO or the business people, right? If you just throw at them complicated spreadsheet, they are unlikely, if they were able to build it, understand themselves, they wouldn't hire you, right? So they wouldn't need you. Yeah. If they are not able to do it and you give them this complicated spreadsheet and nothing else, then they'll just look at you like, okay, fine, Duff, it's great. Well, I like what you did. Good job. And you haven't learned anything. So this concept of kind of breaking it down into kind of easily digestible bites is you want to use that to verify your work and to challenge them to own it. Right. So you want to phrase the question, you want to break down the assumptions of the model to questions that are really easy to understand and therefore hard to dodge. Right. Because if you ask someone, you know, can we increase our quota by, you know, 100%, but double our quota next year, the sales leader will either say yes or no. He can't say, or he or she can't say, well, I say, okay, so is it 200 or is it 150% or is it going to be 20% increase? If you make it simple like that, then they will have to answer you, and that means that you have confidence in how you're building the model.
Yeah, great. And a lot of CFOs within startups, scale-ups have operational involvement and have operations rolling into them. And obviously, operational efficiency is crucial for sustainable growth. What are some of the kind of key operational strategies startups should implement to optimize their performance, would you say, Tom?
Yeah, I think that there's a couple of things you can try. One is, and this is not going to win you many friends, but kind of starving the organization a little bit. Not too much, but kind of not building sort of gold-plated machine, but kind of not say we will never hire this person, but saying like we will wait another 3 months or 6 months, right? That's generally a healthy way to keep the cost down. The other, and maybe that's the one that I believe in the most, is that, and it's also sometimes hard to explain even to relatively sophisticated people like your investors, is the most cost that you will see if the company is not sort of overspending, right? So there's definitely like companies that do like the crazy stuff, right? Or used to do the crazy stuff where they, go on an offsite to, other side of the globe, and that needs to stop, right? But if you're running an organization, or you're part of an organization that's reasonably kind of frugal with sort of doing normal things, the way cost will creep into the operations is through complexity in the way the organization structure, the complexity in the way the decisions are made, complexity in the sort of, what are you trying to do? So ruthlessly going after simplifying things is the way you reduce cost. And that is also when I refer to investors or board or people like that, it's like, you often find yourself being asked to do kind of big things, being it reporting, being it sort of sophisticated kind of analyses and so forth, and you need to be able to push back and say, well, we're not going to do that with this cost base, or if you want us to do this, we'll need to have more cost base. The same goes for things like compliance, right? Like compliance is a good example of something where there is a balance. And I think that it's not for the CFO to set the balance necessarily, unless it's something specifically in your domain. But it's always in your place to remind, like, okay, are we going for perfect compliance with no risk and everything is taken care of, or are we willing to accept some amount of risk and sort of simplicity in the way we approach it? And that's the way to save cost, and sort of keep reminding people that you have to balance the two.
Yeah, I suppose keeping it simple has kind of come up a couple of times, hasn't it, in this conversation? And
put it on my grave.
Yeah, absolutely. I think I'm kind of highlighting that because some businesses sometimes find that difficult to do when they scale from 10 to 100 staff in the space of a year to 2 years. They feel they have to install some sort of structure and some form of communication path to be able to grow in the way that they want to. Which can make things more complicated, more prolonged to get sign off on, and so on and so forth.
And this is where I was referring earlier to Jocko Willing and the sort of SEAL team kind of logic is what he's writing about or talking about is pushing the decisions down the sort of the front line. And I think that's what I think it's immensely applicable to businesses as they try to grow. Because if you're not able and willing to do that, then you will either have you end up with one of the two, right? One is no decisions are made or bad decisions are made, or you build an overhead organization that would just stifle your profitability, right? So in order to have the business to grow, execute some level of sort of good strategy and not have too much overhead, the only way you can do it is by being very clear what the strategy is. So everyone in the organization needs to understand it. People low in the organization need to have information about necessary for their decision making and autonomy to make those decisions and understand the strategy. And if you do that, then you can have a lean organization that doesn't cost much, is able to move fast, and it's at the same time kind of executing the big picture strategy that you as a founder or CEO are looking for.
As a CFO, Tom, how do you align kind of financial goals with the kind of overall mission and vision of the startup? Would you say that you work with?
I think that it's if we're talking about, which is most of what I've seen and what I guess people here are facing, which is cash burning business, right? So if we're in a phase where the business burns cash, then the overarching concern is to either sort of set out a path to reach profitability or make sure that you can raise the next round, right? And sort of know how much time either of those two take, and that you have enough cash to get there. And once you sort of know that kind of spits out the other goals, right? It could be say what you do on fundraising side, the other, and sizing the rounds and all that kind of good stuff, and then of course what you do on growth and efficiency. But I think that the way you define the sort of overarching priority, this is it.
Yeah, absolutely. And conscious of time, Tom, and I think we'll go on to questions from the audience shortly. So maybe one or two kind of further questions before we conclude. From the businesses that you work within, and from your own kind of knowledge and expertise, what type of culture is and what type of kind of talent would you say businesses need to bring on or create to really harness and create that I suppose environments of growth, would you say?
In terms of what? In terms of I'm sorry, I'm maybe can you
No, it's okay. No, I'm just from your own experience in the startups that you worked in, what types of culture have existed that's allowed for that high rate of growth?
Oh yeah. That's a yeah, no, sorry, I didn't catch it first. I think this is a great question, right? Culture is something that we either talk too much or not enough about, right? To me, it's really simple, right? Most startups early on would have pretty open collegial culture, right? Like it's everyone kind of is excited about being there, and everyone kind of has ideas, and as you grow, that becomes harder to just physically do, right? Because when you have 15 people, 20 people, you can all be in the same room and talk and all that. As you get bigger, that becomes difficult. And I think that being honest about the transition is one element, right? So you can't be the one word that sometimes gets thrown around is like, we're family. I don't think business is a family, right? The parallel that someone kind of pointed out to me, which I think is more useful, is something like a sports team. It's a performance-based kind of relationship, right? You're there to do the work that, and kind of understanding that sports team may need to change players to kind of do a different strategy. I think that this is a healthy thing to kind of, for the founders particularly, to start communicating early on. Because if you stick to the commitment of like, we're just family and we all love each other and forever, then that's going to be hard to maintain, and at some point that will lead to kind of dissonance between reality and what you're saying. So I think that's one thing. The other is in keeping with this kind of performance thing, but why I keep kind of going back to the Navy SEAL parallel is, there is a way to keep kind of the small unit camaraderie and within a larger organization if you sufficiently kind of delineate the roles and responsibilities. I think that that's the way to keep the culture dynamic. and kind of being very clear in your communication and honest. I think that's for me, when I was in the various roles, what I've always taken up myself, specifically as a CFO, is pushing everyone, investors, founders, towards as much openness about communicating to the whole company. Obviously, you have to select how much detail you give to whom, but I am a big advocate in communicating to the whole company what the financial position is and explaining it so that people understand when we say things like we need increase our efficiency, why that is, like how it's directly tied to ultimately being able to kind of get to profitability or get to safe place and sort of get a runway that's sufficiently long. I think when you explain it to people, in my experience, everyone understands that, and everyone understands that you're not just kind of like being a jerk and firing someone, but you're adjusting things for the benefit of the company. And but too often I've seen where founders or sort of managers, senior managers, were kind of hesitant, like we're going to scare people by telling them things. I think that if you don't communicate, people will make assumptions. And so if you have a plan and if you have kind of view of where you're going, I would share it.
Yeah, absolutely. No, very useful. Taking people on that journey and communicating continuously, obviously, very important in that early stage. Tom, I've got a few questions that have come in from the audience direct to me, and please keep them coming. So I'm just going to go into them. First one, which non-finance operational activities do you typically take responsibility for within your CFO role, IT, legal, HR, procurement? And how do you approach this without being an expert in these areas?
Great question. I think it's a accordion. It goes up and down, right? But I think like something like legal is a good one, which I think is close to finance. I've done a lot of legal work because I was doing so much deal work, so I feel very comfortable there, even though I'm not a lawyer. That may or may not be the case for other people. And I think that's that comment about if you're not an expert. I think that to some extent is also something you should feel comfortable pushing back against, right? If you're asked to do too many things and it's not something that you feel like you have sufficient knowledge, then just push back. HR obviously is one where it can often be. It's also, I think, in my opinion, the one where I would fight the least for it. In a sense that I think it, as a finance person, you're probably well positioned to do some elements of HR, particularly obviously on a kind of administrative side of it, maybe not on the kind of talent growth and all that. And that's not something that I necessarily think that most of the people in this room are qualified for. So that's a toss up. Internal IT or kind of office operations and all that, I think that's a no-brainer. That can easily report to CFO. And I think that's just a matter of finding your good sort of number two for that area and kind of communicating clearly what your expectations are. I've had only great experiences in that area. Like once you asked me earlier how you manage superstars, and I think this is exactly it. Like, you tell this person or these people that, like, I expect you to do this, and sort of these are the kind of ways how we operate, and give them the room, and you don't have to micromanage that as a CFO.
Yeah, brilliant. And Tom, another question that I'm just going to you. What is the best way for a CFO to command the authority and respect of fellow board members who have superior commercial industry experience?
I think it's we talked about it a little bit. I think that you combine two things, right? You need to be humble early on, meaning as you are kind of getting into that role, and you should not be shy to ask other people to explain to you what they're doing. I think that's the if I were to unwind something in my previous or my early career, is like it's the lack of kind of humility, right? So I think that there's nothing wrong with you asking lots of questions. Conversely, once you build the kind of mental model of the business and you have your financial model sort of working well, and that's a source of authority in of itself, because you have two things. You have information, right? So you sit on the numbers. If you don't, then you should rethink your role, right? Like, you should be the person who knows most about the organization. And if you've done your model right, then you should be very confident about your predictions. And what I mean by that is, your role is not to say, oh, this sales target is too high, but your role is to say, if you believe in this sales target and you're putting these resources into it, this is the impact it will have on our cash flow and our sort of broader position and our ability to raise money. And that's just how it is. And it's either good enough, in which case everyone's happy, or not good enough, and you just drop the mic and let them rethink it. So that's your authority. Authority is kind of the iron logic of from A follows B.
Great advice. I suppose it's showing that level of humility and asking the right questions to educate yourself in certain areas, but then obviously using your own expertise to put across a strong point, which is the financial model or whatever that's in your hand that you've created. So yeah, no, that's really useful. And the question here: how do you avoid being seen as the blocker?
Don't be one.
when you are forced when you're forced to restrict people's budgets and reject their ideas due to financial constraints.
I think there's two ways this can play out, and then different situations call for slightly different sort of obviously approach. But if it's truly the situation like we don't have the money and there's no way, there's no justification, there's just no way we can push it through, then you just tell them that, right? Just that's how it is. In other situations, you may need to play a little bit more kind of Machiavellian role. So suppose the company is not in immediate risk of running out of cash, right? So what typically happens is someone sales and marketing comes to you and says, well, if we spend more, we're gonna grow more. And it's like, okay, fine. So are you okay to increase your quotas, right? And tie your bonus, if it's senior person, it's not on quota, tie your bonus to that target. And sort of what target would you, if I gave you 50% bigger budget, what would you spend it on, and how would that lead to 100% higher outcome, right? So the ROI is getting better. I think you have these kinds of kind of back and forth, and kind of steer away from discussion. I think this is one thing which I think it's important to keep in mind. Too often budgets are discussed as only a kind of in a narrow sense of spending plan, and while this is important to kind of keep the spending in line, in terms of justifying the numbers, you don't want to be discussing just the money that's being spent, but what are you getting for it, right? What is the output of that specific organization, and what would you do with more money, right? Yeah. And then if that can be kind of fit into the bigger story, well, maybe you rethink it. Maybe you do invest more in that specific area, but it has to be justified in context of not just spending money, but what you're getting out of it and how it fits with the overall plan of the organization.
Yeah, great. Well, we're kind of tying up here. I'm going to ask you a quick question here. Hope you get a quick response. Which new skills should finance teams prioritize learning to prepare for the huge evolution in the role of finance functions over the next decade? Probably not a short answer to this.
yeah. If you want a short answer, give me a different question. just on this one, I think that there's obviously things like kind of understanding the tech tools and AI, blah blah blah, and all that. We could talk about it for a while, but I think that ultimately being aware of as much information about the business and the data that is now anything that may be the transition the question is asking about is it's true that now you have a lot more data available to analyze, and finance should be looking at these numbers and integrating in the analysis. You can't be just stuck in your little accounts and sort of your financial. You need to sort of bring in the data from the rest of the business. That I think that's the kind of a shift, if you will.
Yeah, well answered, and good short response, Tom, to end the Q&A session. Really appreciate your time, Tom, and I think there's some valuable information and insights that have been shared there for all the finance leaders that attended today. So yeah, appreciate that, Tom. Dan, I don't know if you've got the final words, and kind of back over to you, I suppose.
Great. Well, again, thank you so much, Tom, for some really sort of inspiring and insightful comments there. I hope that everybody who's attended today has been able to note down lots of great ideas and different things that will help you in your journey. Dav, thank you also for supporting today's event in terms of preparing and sharing all the questions. And thank you everyone in the audience for asking questions throughout as well. So as with all our events, we're going to put a recording of this onto the GrowCFO platform. So that will be in the webinar recording section when you log in, if you want to play back any of it or share it with any colleagues or contacts out there. But thank you again, everyone. Have a great rest of your day, and I'll see you soon.
Thanks, Dan, for having us.
Thank you. Bye.